the green ever so slightly though.
James, it was looking pretty shaky this morning. In fact, if we have a look at the intraday graph of the Australian share market, this is what it looks like. You can see that we got as low as 5,007 points this morning before the market really improved. I think the improvement really came from the material space. While it did end in the red, we saw an improvement throughout the day. And if I just bring up an intraday graph of the material sector, this is what it looks like. You can see that it's finished on the highs for the day. Some comments from China really helping out here. We have heard some stimulus measures coming out of China. It looks like some major investments will be made in terms of Chinese railways, so that's great news for steel, coking coal, iron ore, as well as copper, all inputs into railway infrastructure, and also some tax breaks for smaller businesses to try and help trade over there. So those comments coming through are from China. Great news for the material sector today, which help mitigate some of the losses. Of course, the one area to really light up on the Australian share market, if I can just bring up the market map, and you'll see where all the green is kind of centered today, and that's this area right over here. Lots of bright green on that screen, and that's the property sector. I guess we are seeing some property takeover speculation that's really helping that sector out at the moment. We saw Dexus taking a 14.9% stake in the Commonwealth Office Fund, and of course this all started yesterday when we heard from Commonwealth Bank planning to internalise the management rights of its property platform. So that really impacts on three different property vehicles. That's the Commonwealth Property Office Trust, that's CPA, as well as CFS, stock code CFX, and then also the Kiwi Income Property. So some speculation around takeover consolidation within that REITs area, really helping the property sector up. The materials sector, while it ended in the red, doing a bit better out of those comments from China, but all in all, a pretty slow day.
The outlook for this space?
I guess if we have a look at this space, in the last few months, what we have seen is this space coming under pressure. We've seen the property sector being sold off, and part of that is because of valuations. And if we have a look at when bond yields rise and we see bond prices falling, well, that has implications for the property space and valuations. And we've seen property valuations falling on the back of those higher bond yields rising in Australia as well as offshore. So that's had a negative impact. But really, I think this time around, what's really spurring on this property space, rather than being the dividends or the valuations, is this prospect of takeover in this space. And if we do see one of these Commonwealth property trusts being taken over, or a takeover offer, that may just be the trigger for more consolidation and merger and acquisition activity within this space. Added into the mix, we are starting to see a bit of life in that residential property space, and we are expecting to see this building up, especially after the election. So that's good news for some of the smaller developers like Cedar Woods Property, like Finbar, as well as FKP, all which saw pretty good performances today. And the bigger end of town, of course, we've got the Stocklands, the GPTs and the Westfields all doing well today, up by 2.2%. So I think that the possibility of M&A activity in this space has really lit this sector up, and that's despite the bond volatility that we've seen. But I guess another positive is some of the life we've started to see in that residential space.
Julia, I would agree with you in terms of where we're seeing this M&A activity, but are you also seeing a strategic separation between many of the REITs, and also you mentioned on the resi side, the strategy for Stockland and Mirvac and GPT is now starting to look distinctly separate. And I think some investors may be starting, that's my view anyway, may be seeing that there is actually something different between them all. They're not just a different flavour.
I think that one, this is one I find a little bit difficult, in that the property players, a lot of them do have a residential component, so they seem to be a little bit more of a diversified property play, in that there is a residential component as well as a development component, and often an industrial and office component as well. So if we do have a look at the likes of some of the bigger players like Stockland, like GPT, I guess they do encompass both of those players. Where you can start to begin to specialise in is if you do have a view that one certain property market is going to be ahead of another one. For example, Cedar Woods Property, CWP, you're mainly being bullish on the WA area. If you think that, the New South Wales market is going to be a better place to invest, then you'd invest somewhere else. And then if you're looking at Finbar, you're probably more bullish in terms of the Gold Coast and the Queensland market. So I guess you could specialise in terms of particular regions, but on the larger end of the scale, it is a little bit more diversified there. So it does become a little bit more difficult to split out the real estate investment trust from the developer side of things, because a lot of these companies have both involved.
To get your thoughts on, I suppose, the ongoing amount of production reports we're getting. Oz Minerals in particular. Look, it's a tough time for Oz Minerals, tough time on the market today for Oz Minerals as well, and now looking to focus more on copper than gold.
We did see a downgrade for gold. So gold production expected to be between 120 to 130,000 ounces for the full year. And that follows hot on the heels of the copper downgrade that we saw back in April. So downgrading copper expectations to 82 to 88 million tonnes for the year. And that was back in April. So maintaining that copper forecast this time round. Part of the problem is the slippage it is having at one of its mines. So until that's fixed, we're probably going to continue to get a negative news flow coming through from Oz Minerals. And of course, the other part of the problem is the slide that we've seen in prices. If we have a look at both copper as well as gold prices, this is copper prices over the last year. You can see that the price of copper has been falling, and then we see probably even worse for gold prices over the last year. So gold prices coming under substantial pressure. So not surprising that we are seeing these miners coming under pressure. Oz Minerals actually down 7.3% today, and that was on the back of the fact that it did issue a production downgrade on that gold side. We also saw Newcrest Mining coming out with an update. That stock was also down by 1.3%. And I guess in terms of Newcrest, what we are watching are its projects, because we are in an environment where gold miners are looking at selling off or doing something with their high cost operations. If we have a look at Barrick Gold, if we have a look at Alasa, we know that both of these companies are in the process of selling off some of their more expensive the more higher cost producing assets here in Australia. So watching Newcrest Mining very carefully, especially some of the higher cost projects where we could see, you know, a shortening in the life of perhaps its Telfer mine. We could see a closure of Hidden Valley. We could see a divestment of things like its Benrico project. So just watching Newcrest Mining very carefully there, given that the catch cry in this industry at the moment is reducing capital expenditure, no dividends for the moment, as well as cost cutting.